In this video, we're going to discuss mortgage down payment requirements. How much money do you need to put down to buy your first home or any subsequent home? And what are the costs associated with lower versus higher down payments? Down payment requirements are dictated by the type of mortgage loan you get. There are four general type of mortgage loans. The first is Veterans Affairs. This is available to active military duty personnel and veterans. In this mortgage type, there is no down payment requirement. However, it can be a more costly loan. So if you can put money down, you might want to get offers on conventional and FHA loans to compare. The next type is a conventional loan. This is a non-FHA loan. Your loan broker or your mortgage banker can explain the difference, but this has a minimum down payment of 3%. The underwriting criteria is generally more strict than an FHA. So if you have low credit scores, low income, or this is your first time buying a home, you may not qualify for a conventional loan. The third type is FHA. This is offered through the Federal Housing Administration, and it offers much more lenient underwriting criteria. So this is perfect for first-time home buyers or people with low income or low credit scores or high debt. And the minimum down payment requirement for this loan type is 3.5%. Jumbo loans, those are loans with a balance greater than $420,680. That's not the value of the property, that's the amount of the loan. So if your loan is more than $420,680, you cannot get an FHA conventional or VA loan. You must get a jumbo loan. And the minimum down payment requirement on jumbo loans is 10%, but it could be higher. Some banks have a minimum requirement of 20% or even 25%. Now, although I just explained all the minimum down payment requirements, it's always best to have as high a down payment as you possibly can have because it will reduce your private mortgage insurance costs. This is an added insurance for anybody that has less than 20% down. So if you can get to 20% down over time as you gain wealth, you will find a much more affordable loan product. Calculating your down payment requirement is a fairly straightforward mathematical equation. First, closing costs have no impact on your down payment requirement. It is based on the sales price of the house. So although you may pay $3,000 to $6,000 in closing costs, this won't increase your minimum down payment requirement. So let's look at a couple examples. Let's say I'm purchasing a home for $300,000. That's the sale price of the home. And I get an FHA loan type. 3.5% times 300,000 is $10,500. That would be my minimum down payment, the amount of cash I have to bring to closing. Let's say I want to achieve a 5% down payment to reduce how much I pay for private mortgage insurance, and my sales price is $400,000. Then 5% times 400,000 is $20,000. Let's say I'm buying a $500,000 home and I want to avoid private mortgage insurance altogether, so I need 20% down. That would be a $100,000 down payment. In conclusion, the minimum down payment for loans other than VA loans is 3% for conforming conventional loans, 3.5% for FHA loans, and jumbo loans greater than $420,680 is 10%, but could be higher. The higher the down payment you can afford, the better. Private mortgage insurance gets cheaper at 5% down, 10% down, and 15% down, and there's no private mortgage insurance at 20% down. Thank you very much, and I hope you enjoyed this video. I have another video that breaks down the different closing costs that you can expect when you get a mortgage.